Okay guys, today we are looking at cost classification and specifically cost behavior. There is a chapter cost classification as well, so I would not recommend studying that chapter now. So for now the important stuff is cost behavior. I will explain a little bit about the other classification as well, but our specific focus here would be cost behavior. Other classification that exists in cost classification chapter, it would not make as much sense now. And to be honest, they are not as much important for exam as well. So behavior is very important, and then some basic things that you would need for exam I will explain in this video. So we don't have to study cost classification chapter. And some of the things explained there will be explained in one or another chapter. Okay, costs can be classified into different categories. They can be classified according to the behavior. They can be classified according to nature, direct, indirect, function, and production and non-production. Our primary focus in this video is behavior. Remember, in order to control costs, in order to manage costs, you need to understand how they are. It's with disease. You need to know, like nowadays coronavirus going on, so you need to know what it is. Then maybe you will be able to control it. So we need to understand costs in order to maybe control them, estimate them, manage them. So behavior classification looks at behavior of cost. What is the behavior of cost? The behavior of cost is whether it increases or whether it decreases or whether it stays the same. What happens to the cost when there is change in activity? So we are looking at cost in relation to something. That something is usually units, but we call it level of activity. That something can be labor hours as well, it can be machine hours as well, but most probably is going to be units. So we are looking at cost in relation to activity. Remember, cost is the dependent and activity would be independent. I previously explained as well, dependent is something that depends on something to change, and independent is something that causes change. So we are looking at cost, which is always going to be the dependent variable here in relation to activities, level of activities. And level of activities can be anything. So we want to know how costs react to activity. So in behavior, we have different types of costs. One is fixed cost. To understand fixed cost, we will compare it to variable cost, which is another category here. So we will look at variable and fixed cost together. So as its name suggests, fixed, it is cost that is fixed, means stable. It is cost that doesn't change with level of activity. It is cost not affected by level of activity. it is cost that stays the same regardless of the level of activity. So no matter whatever the activity is going to be, fixed cost is always going to be the same. Like I have a graph here. If we represent activity on horizontal axis and cost on vertical axis, and this is usually how the graphs are going to be in exam. On vertical axis there is going to be cost and the dependent variable usually, and on horizontal axis you have the level of activity. So fixed cost, no matter whatever the level of activity is, this line remains stable. It doesn't change. It doesn't increase. So it doesn't increase here, no matter where we look at it in activity. The example of this is rent of building. Remember, these examples are common things. They practically, rent of building could be different. But the example I'm giving here is how usually the rent of the building, no matter how many units you produce, no matter how many units you sell, it is going to be the same. Or manager's salary, for example, no matter how many units are sold, is going to be the same. DSL internet, unlimited package, no matter how much you download, payment is going to be the same. But remember, DSL could have unlimited package as well. So the examples here are just common things, what they usually are. So variable cost is exact opposite of fixed cost. Fixed cost doesn't change, variable cost changes. Means change, variable means changeable. So variable cost is changeable cost. It is cost that changes with activity. It is cost that doesn't stay the same. And most importantly, in decision making, you will study variable cost is cost that is affected by our decision. Because if we make decision to produce more or less units, this cost is going to increase and decrease. And then in relevant costing, you will study in F5 that variable is a relevant cost. Fixed cost is relevant cost. I will not go into too much details, just giving a reference here. So the graph is that whenever the level of activity increases, the cost increases with it. Examples could be material, or it could be commercial electricity rate, or it could be 4G internet, or it could be call charges. Okay, remember, examples that I'm giving you is how it usually is. They could be different. So, variable cost, straight line increases, fixed cost stays the same. But variable costs are two types, two main types. We have the linear variable cost and the nonlinear variable cost, or curvilinear. Linear is something that can be put on a straight line. Something that can be put on a straight line is called linear variable cost. Linear variable cost is variable cost that changes in same proportion or per unit is always the same. So whenever you're buying material, for example, per unit is $5. If you buy 2 units, it is $10. If you buy 3 units, it is $15. If you buy 4 units, it is $20. If you take 20 divided by 4, it becomes 5. So per unit is always the same, like in this graph. So that means a linear variable cost per unit is just like a fixed cost. A linear variable cost doesn't change per unit. No matter how many units is produced or how many units are sold, per unit is always going to be the same. But a curvilinear variable cost is a variable cost that doesn't stay the same. It could be either decreasing or it could be increasing. Example of decrease I will give you is learning curve, something you will study in F5. It is idea that with time and practice, the time per unit of employee reduces. The more an employee works, the less and less time he takes. If we are making payment to employee per unit hour basis, then the cost per unit will decrease. The cost could increase as well. Like you have in electricity residential bills. Residential bills start with the lower rate. The more you consume, the higher the rate becomes. Obviously, curve is an idea. It doesn't have to be a perfect curve. The idea is that some variable cost could always be the same per unit, no matter whatever the output is going to be. Per unit is always going to be the same. And some variable cost could either decrease or they could increase per unit. Obviously, variable cost overall, in total, they increase. But when we talk about per unit, they could either be same per unit or they could be changing. So, when we usually talk about variable cost, we talk about linear variable cost, unless specifically told that it is non-linear variable cost. So we say the variable cost in total increases and per unit it stays the same. Fixed cost in total stays the same, but per unit it decreases. For example, you have building. If you produce one unit, you're paying rent $2,000 for the building. If you produce one unit, the cost of one unit would be $2,000 in relation to the building. If you produce 2 units, it will be $1,000. If you produce 4 units, it will become $500. So the more the units there are, the less the cost per unit is going to be. So that is why whenever we have fixed cost, we should try and make and take benefits from it by increasing our capacity. But remember, it is not always a good idea. So whatever I'm explaining here doesn't apply to the advanced papers. So generally, whenever we have fixed cost, we should try and make benefits from it. Like in variance analysis, I'm going to explain something, maybe you don't understand it now. In variance analysis and fixed variances, the more the activity there is, the better it is, because the more the activity, the less the cost per unit is going to be. But obviously, there are other factors that I will not explain at F2 level. So variable cost changes, fixed cost doesn't change. Variable cost doesn't change per unit, mean linear variable cost, and fixed cost decreases per unit. And then in variable cost, we have 2 types. Next, we have a cost that is mixture of both costs. It is called semi-variable cost or semi-fixed cost or mixed cost, whatever you call it. So a semi-variable cost has a fixed element. That fixed element is not actually shown in the graph, but there is a hidden fixed cost line here. So we have fixed cost. On top of that, there is variable cost. So semi means half. So it is half fixed cost or half variable cost or a mixture of fixed or variable cost, whatever you call it. But it is a cost that is part fixed, part variable. Example of this would be, let's say, salesman's salary. One is the fixed salary that he receives, that would be fixed, and another is commission. Usually in organizations, you are working as a salesman, you receive a commission. That commission part is going to be variable. Because of the variable part, we should make sure that it is not increased, but because of the variable cost, we should not increase our activity. Because of the fixed cost, we should increase our activity so that the cost per unit decreases. So semi-variable cost has both quality of a fixed cost and variable cost. Remember, this line doesn't start at the bottom, it starts at the top and on this line. Next, we have something called step cost because it looks like steps. Step cost is fixed cost, but for a certain limit, after which it increases and it is fixed again for a certain limit, increases again, and then is fixed again for a certain limit, and vice versa. Example of this I will give you is supervisor, let's say. In a company, when there are 10 employees, you need one supervisor. When they become 11, you need another supervisor up to 20 employees. And then when they become 21, you need another one up to 30 if we are working according to standard. Or an example would be invigilator. ACCA invigilator, they have a policy that up to 20 students, if you have exam center, you need one invigilator. But if those 20 students become 21, even if they increase by one student, you need another invigilator up to 40 students, and then another invigilator up to 60. So if your activity, for example, in your institute, students giving exam don't increase more than 20, then this invigilator cost will be like fixed for you. But if your students are more, they're like hundreds of students, then the cost of invigilator would be like a variable cost to you per unit. So for some organizations, maybe the step cost is actually like a fixed cost because their activity don't usually cross that limit. Or maybe it is a variable cost for some organizations because they work in such a large volume that it actually seems like a variable cost per variable cost. Remember, doesn't have to be per unit. It can be per 2 units. It can be per 4 units. So it really depends on situation. Okay, next. We have maximum charge. Maximum charge is variable cost, but there is a maximum limit. I remember there was an internet company where they had a package. They were charging a certain amount per 550 GB downloaded, but then they had a maximum limit, which means if your bill was exceeding that amount, they were not charging any higher. So some organizations could have variable cost, but after you have purchased certain quantity, then they tell you, okay, extra than this would be free. It can happen in restaurants as well. I've seen some videos where a certain restaurant offers meal if you eat certain amount. After that amount, whatever you eat is free. Minimum charge is variable cost with minimum limit. So this is variable cost with maximum limit, and this is variable cost minimum limit. A good example of this I will give you is piece rate with minimum guarantee. In some organizations, they make payment to the employees based on output. But because if you're making payment to employee based on output and there is times when there is no production, it means employee is not working, it means employee earns nothing. In that situation, they have nothing. So as a security, what some organizations do is they guarantee a certain amount. For example, $100. They could tell their employees that they will give a minimum $100 and they will give $1 or $2 per unit. What that means is that for a certain week, if employee earns less than $100, he will receive $100. It doesn't mean he will receive $100 plus whatever he earns. That will become semi-variable costs. In the minimum charge, if your payment is less than 100, you receive 100. If it is more than 100, you can receive as much more as possible. So piece rate with minimum guarantee, you will study this in accounting for labor chapter as well. So it's a good example of this. Next, we have variable cost with bulk discounts. Remember, bulk discount is discount on large quantities purchased or whatever. So again, they are variable costs, but when you buy in large quantity, there is discount received. The discount could be on additional units. Let's say I tell you I will give you $1. I will sell product at $1 per unit. But if you buy more than 1,000 units, every additional unit more than 1,000, I will charge at 90 cents. So there is a discount after 1,000. So this is the example of that. Discount on additional units. The previous units are not affected. Any additional units that you buy would have discount. This is a more common way they are used. And discount on all units is if I tell you that I will charge $1 per unit up to 1,000 units. If 1,000 units is exceeded, I will give you discount. I will sell at 90 cents all units, including the initial 1,000 units. Now, this is not very common. This can be only common when you are buying all units at once. In that situation, it can happen. If you buy 1,500 or 2,000 units at once, then it makes sense. Otherwise, it is not very practical. So remember, after 1,000 units, there is discount, so this line will bend a little bit. Okay, so this was classification according to behavior. Next is classification according to nature. In nature, we don't have as much detailed classification as behavior, and it's not as much important as behavior as well. In nature, we have three categories. We have material, labor, and other. So a cost could be either material, it could be labor, or it could be other. I will explain what is other. So you already know what is material, what is labor, but I will explain what is other. Other could be electricity, it could be rent, it could be gas. So these three categories. Next we have direct and indirect. Now direct and indirect cost requires a lot of judgment. So it is not something that you will learn just by looking at definition. It requires a lot of judgment, and usually whenever a cost is direct and indirect, it will be mostly told. So there isn't a perfect definition for it. There is only qualities of direct and indirect cost. So obviously in direct and indirect classification, we have only two things. One is direct, another is indirect. Direct is the cost that is incurred directly on units. That's why it's called direct. So happens in the production department. So direct cost. An indirect cost is cost not incurred on directly on units. This is one quality. And direct cost can be traced up to units. What it means is if we have certain units, we can find what is the cost per unit of our direct cost. So usually we can find the cost in units. Indirect cost, it cannot usually be estimated. Direct cost can be estimated with accuracy. If we want to predict what will happen, what will be the cost of a certain units, direct cost can be predicted. Indirect costs cannot be predicted with reasonable accuracy. Examples of direct cost: material and labor. Not all labor cost is direct. You will study in Accounting for Labor chapter material cost as well. Not all material is direct. So that's why this direct and indirect classification requires a lot of judgment. So the idea is, when we are producing something, is the cost essential in producing that item? If it is direct cost. If it is not essential, it is indirect cost. Indirect cost is like electricity or rent or gas. But remember, electricity can be direct as well, it can be indirect as well. An example would be, let's say, to make it simple, otherwise it is a very complicated topic. It requires a lot of judgment. Let's say there is a person involved who is directly producing something and you are giving him payment per unit of $2. That is a direct cost. But because the place is very cold, you have heater on to make the place warmer, that is an indirect cost. Even though it is incurred in the production department, it is an indirect cost. Remember, when we talk about direct cost and indirect cost, we are talking about the production department. So other departments, like sales and distribution and stuff, they are indirect cost. Direct cost can only be the cost of the production departments. And usually, usually the direct cost are the relevant cost as well, whenever we look at relevant cost in F5. Otherwise, it is a topic that requires a lot of practice and judgment. With time and practice, you will understand which cost is direct and which is not. Next classification is function or department. When you take cost and you divide it according to function, then it is function or department. Like cost incurred in the sales department, cost incurred in the purchasing department, cost incurred in the HR department, cost incurred in an internal audit department, cost incurred in research and development department, cost incurred in finance department, cost incurred in production department. There could be one cost that is incurred in all departments. For example, cost of paper. All department could be using paper. All department could be using electricity. But there are some costs that are specific to some department, like marketing would be cost that is specifically relating to research and development. Selection and recruitment costs would be specifically related to HR department. So you would have studied these departments in F1 as well. But to understand the specific costs that are incurred, I recommend go to the cost classification chapter and just look at those cost types. So not very important exam-wise, but when we divide costs according to department or functions, it is called functional division. And then we have production costs and non-production, the last classification. Costs incurred in production department is called production cost. Costs incurred in all other departments is called non-production cost. Okay, so classification is done. We have a topic called Hylo Method or Hylo Points Method, which is used to separate fixed and variable cost in a semi-variable cost. Remember, semi-variable cost is a cost that has both fixed cost and variable cost element in it. I have an example here. Using Hylo method, what is the variable cost per unit? A company incurs the following costs at various activity levels. We have units given and we have fixed cost given. Remember, it is not fixed cost because it changes. If it were fixed cost, it would not change. But let's see if it is variable cost. If I take 250,000 divided by 5,000, we have 50. If I take 12,000 divided by 500, it becomes 7,500. If I take 400,000, divide by 10,000. So it is not same per unit as well. Remember, if it is variable cost, and usually it is linear variable cost, you don't have non-linear variable cost in Hylo method. So if it were variable cost, then per unit would be same. It is not same in total as well, which means it is not fixed cost. It is not same per unit as well, so it means it is not purely variable cost. And if you can see, it decreases with more units. The more units, the less the cost per unit is. So that means there is an element of fixed cost in it. So we need to find how much is the variable cost and how much is the fixed cost. And then maybe predict cost for a certain activity level. Even though in this requirement they're only asking about the variable cost, but we will find fixed cost as well. So in Hylo method, what you do is you start with units, don't start with cost. You take high unit and its cost, even if high units don't have the highest cost. Remember, we are not taking high unit and high cost. We are taking high units and its cost, even if high units doesn't have the highest cost. So high units is 10,000 and its cost is 400,000, and low units and its cost 5,000 and 250,000. Remember, even if low units don't have the lowest cost, so you decide based on units, not based on cost. So we have taken high units and high cost. High units and its cost, low units and its cost. So we have 10,000, the cost of which is 400,000. We have 5,000, the cost of which is 250,000. So this is our data. Subtract high from low. So I will take high cost and minus low cost. This will give me cost difference. I will take high units minus low units, and it will give me units difference. So in 5,000 units difference, we have 150,000 cost difference. Now if I take 150,000 total difference of cost divided by total difference of units, it will give me difference per unit. And the difference per unit is variable cost because in 2 points, if anything changes, that would be variable cost. I've explained in the next page. The way it works is, if we have a semi-variable cost, let's say we have 5,000 units here, and the cost of which is here, 250,000. We have 10,000 units, and the cost of which is 400,000. So let's say one point is here, and another point is here. So the only thing that will change in these 2 points, let me stretch it from there, would be the variable cost. So fixed cost would not change, the variable cost would change. So if we look at this change and we divide it by the units, it will give us change per unit. And that change per unit is your variable cost. But obviously it doesn't end here. The answer of this is B. But now we have to find fixed cost. Remember, semi-variable cost is made of two costs. We have variable cost plus fixed cost becomes total cost. Now if I take total cost and a minus fixed cost, variable cost, it will give me fixed cost. If I take total cost and minus fixed cost, it will give me variable cost. Because Hylo method first gives me variable cost, I can take the variable cost minus from the total cost, it will give me fixed cost. So now take any activity, whether you want to take 5,000 or whether you want to take 10,000, whichever you want to take, it will give you the same answer. I will take both of them to show you that it gives same answer. So if I take 5,000 and multiply by 30, the variable cost, it will give me total variable cost. Or if I take 10,000 multiplied by 30, it will give me total variable cost. Now if I take that, if I take 150,000 and minus it from 250,000, the total cost of 5,000, it will give me fixed cost. So total cost minus variable cost gives you fixed cost. If I take 400,000 minus 300,000, it gives me same fixed cost. So whether you take the low activity or whether you take the high activity, you take that, multiply by units, and then minus it from the total cost. So what we have basically done is taken the total cost minus the total variable cost. It has given us fixed cost. Now once you do that, you can predict the cost of any activity. Let's say if we want to predict the cost of 20,000 units, what we can do is take 20,000 multiply by 30 variable cost. It will give us total variable cost. Take that, add fixed cost with it. Remember, fixed cost stays the same no matter whatever the activity level is. So we will have total cost. You could write it like this, or it is usually written like this. Y equals A plus BX. Y is total cost, A is fixed cost, B is variable cost per unit, and X is number of units. For example, if I take this, we have 100,000 fixed cost plus variable cost multiplied by units 20,000 will directly give us 700,000 total fixed cost. So this is how Hylo method works. And usually in semi-variable cost, we have fixed cost and variable cost. We have a step cost as well, which I will explain later in a question. I have another thing to explain here. But for now, this is how it is calculated. There's something else I want to explain before we go to the kit questions. I've explained it previously as well. Whenever there is relation between two things, we call it correlation. You will study that in details in forecasting chapter as well. So this exact information you would need in forecasting chapter as well. So we have independent variable and dependent variable when two things have relation. Dependent variable is something in which change is caused, and independent variable is something that causes change. And that relation could be, remember, positive or direct. So it can be positive or direct, or it can be indirect or inverse or negative. So positive relation means when one thing increases, another thing increases with it. I have given an example here. Like sales, independent, sales revenue dependent. The more the sales, the more the revenue. We don't say the more the sales revenue, the more the sales. It doesn't seem right. Or the more marketing, the more the sales. If we are comparing marketing and sales, then sales becomes the dependent. So when we are comparing two things, maybe in one thing is dependent. In another thing, when we're comparing, maybe that becomes dependent. Like here in sales and sales revenue, Sales is independent, but when we're looking at marketing and sales, sales becomes dependent. So we cannot always say whether a certain thing is dependent or independent. We look at dependent and independent comparing two things. So marketing here is independent and sales is dependent. So the more marketing, the more will be sales. Unit and cost, the more units, the more will be cost. So when one thing increases, another thing increases with it. Relations could be inverse as well. Like you have heat and soup sales. In heat, people don't use soup as much because it is hot. Or selling price and demand. You will study in paper F5 pricing chapter, the higher the price, the lower the demand for a product. The lower the price, the higher the demand. Or cold and ice cream. People use ice cream more in summer than in winter. So if we look at cold and soup sales, then they are directly related. The more the cold, the more will be soup sales. The more the heat, the more will be ice cream. But if we are looking at these two, then when one increases, another decreases with it. So this is it for cost classification. Some of the points I will explain in questions. Remember, my style is most of the things that remain, I explain in questions. So let's look at questions. Okay, let's look at cost behavior. Kit questions. Okay, fixed costs are conventionally deemed to be which of the following? Constant per unit of output, constant in total when production of volume changes. Remember, constant means stable, outside control of management, easily controlled. Sometimes they can be controlled, sometimes they cannot be controlled, but one answer that is correct is constant and total. No matter whatever the level of activity is, the output is always going to be, the cost is always going to be the same. What is the estimate of overheads if 18,300 square meters are to be cleaned? And overheads means indirect cost. But now don't focus on the term overhead. Just assume cost. What would be the cost if 18,300 square meters are to be cleaned? The following data relate to overhead expenditure of contract cleaners at two activities. We have square meters cleaned and then overheads. Obviously, we have two activities. One is high and another is low. Remember, even though I explained steps for Hylo method, but you don't have to do it in those steps. They were just for explanation. I just have to take the high activities cost minus low activities cost and directly divide it by activity high. So what I've done is found the cost difference divided by units difference, and that would directly give me variable cost. Once I have variable cost, I can take any activity to find fixed cost. Once I have the fixed cost, I can use that to find total cost, which is 5.3 multiplied by 18,300 total square meters cleaned. So 110,305 is going to be the answer. Okay, so we have some graphs, and then there are some questions relating to these graphs, 3.3 to 3.7. So which of the above graphs illustrates cost described in questions 3.3 to 3.7? A linear variable cost when vertical axis represents cost incurred, which simply means if we put costs on vertical axis and units on horizontal axis, which usually is the case. So linear variable cost. Remember, we have a cost that has a straight line, but remember it starts from the bottom. This is very similar to this one, but this is a semi-variable cost. So linear variable cost is graph number 2. Fixed cost, when vertical axis represents costs incurred, remember fixed cost is the one stable one. Linear variable cost, again, when vertical axis represents cost per unit, remember the fixed cost in total and variable cost per unit graph are exactly the same. So if we look at it per unit, then this is linear variable cost. If we look at a total cost, then this is a fixed cost graph. So graph number 1. Semi-variable cost, when vertical axis represents cost incurred. So this is variable, this is fixed. A mixture of both is this one. We have a hidden fixed line here. This is also similar to that, but remember, this line should start at here, not anywhere in the middle. Next, step cost when vertical axis represents cost incurred. Remember, step cost looks like step. So graph number 3. What is the best estimate of company's fixed cost? So this is very similar. I will leave it. A production worker is paid a salary of $6.50 per month plus extra 5 cents for each unit produced during the month. How is this type of labor best described? So we have $6.50 per month, which is the fixed, plus 5 cents extra, which becomes the commission, the variable cost. So it is both fixed and variable cost, or semi-variable cost, which is D. What type of cost is a supervisor's salary cost when one supervisor is needed for every 10 employees? I remember I gave this example in step cost. So this is an example of step cost. Using Hylo method, which of the following is correct equation for linking advertising and sales from data above? Remember, Hylo method is not just used to calculate variable and fixed costs. It can be used to calculate any variable and fixed element in two dependent variables. Like in this case, the following information for advertising and sales has been established over the 6 months. We have months given, not important in Hylo method. We have sales and advertisement. So we have sales and advertisement. Remember, we have to find what is the dependent variable and what is the independent variable. In sales and advertisement, I explained previously as well, advertisement is the independent variable, and sales is the dependent variable. The more the advertisement, the more the sales. So we have to find using activity high-low. So we have to decide based on this. So high activity is 6.5, low activity is 2.5. So 6.5 minus 2.5, and we are going to take the cost. Think of it like units and cost. We have 225 at high, from which we are going to minus low, which is at 125. And then 1 divided by the other, we have variable element, which is 25. Now this is not variable cost, this is variable sales. What it basically means is that every $1 spent on advertisement generates 25 additional on sales, so variable sales. Next, we have to find fixed sales. In cost, obviously, we find fixed cost, but here we are finding fixed sales. First, let's find it, then I will explain what it means. So take any activity, take the total minus the variable, multiply by activity, will give you fixed sales. Now, what this means is that even if we don't do any advertisement, we are going to have 62,500 sales. Advertisement is going to boost it. Just like in fixed costs, even if there was no production, fixed cost is going to be incurred anyway. Variable cost was just incremental with every units additionally produced. So variable sales is the increase per advertisement of sales. Fixed sales is the sales that is going to be done even if there is no advertisement. So the equation that we will make will be 62,500 plus 25 variable cost multiplied by units. So they're asking about that equation. So sales revenue would be 62,500 plus 25 advertisement, which means A is correct. Remember, the figure here was given in thousands. Okay, what type of cost is this? a total cost is described as staying the same over a certain activity range and then increases by remaining stable over a revised activity range in short term, obviously semi-variable step cost. Okay, Hylo method. This is the example I did, so I will skip it. Which of the following statement is consistent with the above diagram? So we have semi-variable cost going on, and then there's a maximum limit. Remember, different costs can be added together to make a cost. So in this case, we have semi-variable cost and maximum variable cost added together. So it is a semi-variable cost with maximum limit. So which one example would be consistent with that? Annual factory power cost, where the electricity supplier sets a tariff based on fixed cost, okay, we have fixed element, plus a constant unit for consumption, variable, subject to a maximum annual charge, maximum limit. So this is the answer. We have a fixed and then constant per unit and then a maximum limit. Next, Hylo method, nothing interesting here. Very similar question, so I'll skip it. Next, which of the following graphs is consistent with the behavior of total material cost in a period? When total purchase of raw material exceeds 30,000 units in any one period, then all units purchased, including the initial 30,000, are invoiced at lower cost per unit. Remember, this is discount on all units. If we look at the graph, remember we didn't even study this graph. This graph as well, we didn't see. In discount, I explained this graph and this one. This is on additional units because no effect is on the previous units. And this is on additional units because there is a decrease in the cost of the previous units as well. So the answer here is A. Okay, next, Hylo method as well. Nothing new here. What would be the variable cost per unit? To notice 0.01 using Hylo method. Okay, this is Hylo method, but this has something interesting. The following shows total overhead cost for a given level of company's total output. We have cost and then units. We have 1, 2,000, 3,000, 4,000. Okay. And remember, notice one thing. We have 4,000, but its cost is 9,500. We have 3,000, but its cost is 10,000. So this is a trick. A step-up and fixed cost of 500 occurs at an output level of 3,500. So this is another trick. We have step cost as well. After 3,500 units, there is a fixed cost of 500 increase. Now, we're going to do the normal Hylo method. We will take high units in its cost, low units and its cost. Remember, the students that don't understand this correctly will take 10,000 and 4,000 because they believe that you have to take 1,000, 4,000, and which is low units and high units, and then high cost and low cost. But no, it is high units, its cost, even if it is not the highest cost. So we take low units and its cost, even if it is not the lowest cost. So the high units is 4,000, the cost of which is 9,500, and low unit is 1,000, the cost of which is 4,000. If we look at 1,000 units, they are not more than 3,500. So the 1,000 units cost is 4,000, but the units is not more than 3,500. So there is no step cost. But if we look at 4,000, there is a step cost. Cost of it is 9,500. So there is a step cost in this one. Remember, I explained in Hylo method, the way it works is it needs to have a semi-variable cost. We have fixed cost and we have variable cost. We find the difference. But when we have a step cost, something like this happens. So there's a jump. When we calculate the difference, that difference is not just variable cost. It has a step cost with it. So what we need to do is, in order for Hylo method to work, is we need to remove the step cost and then it will work. So in our example here, this one doesn't have step cost. So I will take 4,000 minus step cost is 500, and there is 0 steps because it is not more than 3,500. So multiply by 0. So basically it means there is no step cost. But in this next one, 9,500, we have 3,501 step, and it is 4,000. So next step would be after about 7,000 units. So there is only one step. If you want to find with ease, you just take the units and divide by steps quantity. So it gives you one step. For example, if there were 25,000 units, and then it directly you would know that it is 7 steps. You can find it like this. But this is clear that there is only one step here. So multiply by 1, it gives us, now this cost doesn't include step cost. That means now we can work a Hylo method like we usually do. So high units cost minus low units cost, high units minus low units will give us the variable cost, which is A. They didn't ask for the fixed cost, but if we wanted to find fixed cost, what we will do is take the total cost, just like usual. For 1,000 units, for example, 4,000 minus variable cost 1.667 and minus the step cost. But obviously there was no step cost, so multiply by 0. So round off. Sorry, I didn't multiply by units. 1,000 units becomes 2,333. If I look at 9,500, we have 4,000 multiplied by 1.667. If I go into details, and then minus step cost as well. As many steps. Remember, when you're calculating the variable cost as well, you have to eliminate the step cost. And whenever you're calculating fixed cost, if it includes step cost, then you have to minus the step cost as well, then it will work. And then when you are calculating the total cost, let's say we are calculating the cost of 15,000 units, we have to find how many steps are there. We have to divide by the step units, so we have 4 steps. So we have fixed cost 333 plus the variable cost, which is 1.6667, multiplied by units 15,000, and plus step cost 500 multiplied by 4 steps. So this is just my easier formula for finding steps. So this is it. This is everything about Hylo method. Okay, next is each of the costs variable or semi-variable or fixed cost. A company has prepared flex budget at 2 activity levels. So this relates to flexible budget. Do it after budgeting topic. Once you have studied flexible budget, you can come back to this question. Next, what is the variable cost for each unit of output above 15,000 units? The following question is taken from 18. The following observation of output and cost have been made. We have units and cost. It is known that at an output level above 15,000 units, variable cost per unit drops by 1 per unit for all subsequent units produced. What is the variable cost of each unit of output above 15,000 units? Okay, so there's a problem after 15,000 units. The variable cost decreases by 1,000. So in a Hylo method question, remember the thing to do is if there is any unusual thing, try to remove that unusual thing. If we look at 8,000 units, we have okay because it is not more than 15,000 units, so the cost would be okay here. And then at 20,000 units, the cost would have changed by $1 for extra 5,000 units. So we need to remove that change, just like we did with the previous question where we removed the semi-variable cost. So if we look at 20,000 minus 15,000, which is where the cost changes. That means for 5,000 units extra, cost has decreased by $1, which is 5,000. If cost didn't change, if cost hadn't changed, then the 68,000 would have been 73,000. When it becomes 73,000, now we can use the Hylo method to calculate our variable cost. Remember, the idea is to remove unusual things from Hylo method. So we have variable cost, which is normal. If it drops by $1, then it would be 1.80, which is A. So this completes cost behavior.